A strange phenomenon has hit Wall Street, and it's driving up the prices of some struggling brands like GameStop. The stock is up 6,000% since its low point last summer. This all started on Reddit, where users urged each other to buy up shares, and they did. But the phenomenon could end up costing people a lot of money. Paula Ebben spoke with a financial analyst to break it all down for us.
Can you explain in layman's terms, what's the deal with this whole GameStop thing?
Sure. You know, I knew I was in trouble when my 13-year-old son came home last night. And he said, "Dad, I'm trying to decide whether to mine Bitcoin or buy GameStop stock." So that was my first pause. And
that's when you know it's out of control.
That's when you know it's out of control. And I think what we're starting to see now is sort of rampant speculation in elements and segments of the financial markets. And it is eerily reminiscent of what we saw in the late 90s in the dot-com bubble, but it's not a reflection of the whole economy. And I think that's
right. These are like day traders.
These are day traders. And today, it's really the revenge of the day traders. And they're going after the most hated names on Wall Street, the most shorted stocks. Companies, not just GameStop, but companies like AMC Theaters. When's the last time you went to a movie theater? And that stock is up dramatically. It's companies like Bed Bath & Beyond. It's companies like BlackBerry, companies like Express, all challenged businesses that are up dramatically. So I think it's an indication that something's not right in the financial markets.
Right. So this is like The Big Short.
This is like The Big Short, and typically these movies don't have a happy ending. And I think it's important that it does clean up the markets and it does weed out speculation and it makes it safer for the rest of us. But we've got to get through this challenging period.
Right. So is this a new phenomenon?
So it's not a new phenomenon, but I think what's happened is, in part, again, coming into this year, we saw very high valuations, very rich sentiment, in part fueled because of the very low interest rates due to COVID. So that's actually fueled this. And, you know, in some circles, there's talk that even stimulus money is making its way into day trading accounts. So all of those things can fuel speculation. People are stuck at home. They've got more free time on their hands. There were fewer sporting events to bet on. So this money is coming into the markets. Look, it's great when people have an interest in their future, an interest in investing, an interest in taking independent responsibility for everything that comes before them. It's not great when it's day trading. And 8 out of 10 day traders lose money, and that's what we may see as a result of this.
And what is new now is that apparently all of these people engaged in this kind of speculation around GameStop have found each other on the website Reddit.
That's
right.
Exactly
And so
right.
Social media has been like jet fuel for this.
That's exactly right. And it's something that we never really saw before. We did see chat boards in the late 90s, but not to this degree. And it's, again, when we talk about Wall Street getting together, it's this democratization of information. Information is so widely available today that it's allowing these groups, and in part, it's somewhat speculative in nature, but they can gang up on the professionals. It's great that people are taking an interest, and it's great that this information is so readily available. What's not great is you're taking the most challenged companies, the companies with flawed business models like GameStop or like AMC Theaters, and those are the ones going up the most.
Because when those stocks rise, that might seem like it's really funny that they're having this influence, but when they fall, that can hurt real people.
It can hurt real people, and it can hurt the hardworking savers at home and the people that really want to see a more rational environment. You know, investors, we had a lot of phone calls today from people very concerned about what they're seeing in the markets because it looks like a casino. And if they want a casino, they can go to Everett. They don't want to see it in their 401k, and they don't want to see it in their retirement account. So I think that's the big concern here, is that it's bringing in this speculative element that, and they want to see money grow slowly. They want to make, they want to make their 401ks grow, but they don't want to see a lot of speculation that could affect the future.
Right. So is it true that this has cost some investors?
Oh, absolutely. And for the most part, it's been professional. So I think, you know, there are large hedge funds, large Wall Street firms that short or bet against companies. So those are somewhat vilified businesses to begin with. But at the same time, when you're getting this speculation, you're getting investors who think they're looking for easy money. If ultimately the rug gets pulled out from under them, and then the last person standing, like what happened in the late 90s with the dot-com bubble, they may lose confidence in investing in their 401k in the future. So that's, I think, the big concern. And we're so grateful that Secretary Galvin is on this. He's taking a leadership role, and the regulatory environment will clean this up to restore confidence for the mom and pops at home that want to invest in their future.
What exactly is Secretary Galvin saying about this whole climate?
Yeah, so Secretary Galvin has said repeatedly that he's been very concerned about some of the online trading, some of the things that are happening right now in terms of day trading, in terms of speculation at home. Of course, he wants a safe environment for people to invest in. And there's not a lot of transparency in some of these boards. We don't know who's behind some of the hype on some of the chat boards. And some of those people have an ulterior motive, and they're baiting other investors to come in. So I think what we'll find is Secretary Galvin will get to the root of this. He will clean up some of what's happening. You'll see a more sane regulatory environment going forward under the Biden administration, and that will restore confidence to the financial markets, which today is somewhat in jeopardy as a result of what's happening.
Wow. Also, what does happen to those shares that everybody's buying once the price drops again?
Yeah, well, and again, not to get too wonky with this, but what really starts to happen is you get investors that are betting against companies, and lots more investors today are betting on those businesses. So those companies are rising. And what we saw is many of the online trading platforms couldn't keep up with the volume. It was so excessive. And again, these are not household companies that have very strong fundamentals, that are doing very well. By contrast, these are the companies that really, AMC Theaters literally, you have a company that is in the business of holding cinema and movies, and the stock is higher today than it was pre-COVID, and very few people in Massachusetts have been to a theater in over a year. So I think that's an indication that it's not the fundamentals at work here. It is pure speculation and a lot of technical things that are beyond people's control, and that's what's unnerving for them.
Well, you hear a lot of young people say online, on Twitter, you see them commenting on it, clearly on Reddit, that the suits on Wall Street always made this look real fancy and complicated. That's exactly right. And they've just figured it out, and now they're mad. What do you see young people who think this is kind of exciting and fun?
I think you make a really good point. And some of this is, there is some anger about some of the bailouts that have gone over the years in terms of the financial industry. And, during these really difficult periods of COVID, Wall Street did very well. They benefited from cheap money. And, now it's the revenge of Main Street coming after them. Wall Street did better than Main Street. The financial markets are way ahead of the rest of the economy. And maybe it's time for that to turn. Maybe it's time for the rest of the economy to have a better year. And so far in 21, that's the indication that the broad economy, the Main Street economy, may do a lot better than the financial markets. And that's not necessarily a bad thing.
Yeah. One last question. I think most people, let's say over 55, assume that all of those controls that were put in place at the end of the Depression, right? The SEC, and that there are laws regulating Wall Street. And so that something like that could never happen again. But this kind of indicates there are vulnerabilities.
It's so true. And again, the regulatory environment really does play an important role here. And over the last 4 years, the regulatory environment has shifted, and it hasn't been as stringent. It hasn't cracked down on a lot of the excesses that we're starting to see. And technology is advancing. Even in Massachusetts, it's advancing in the financial industry at such a rapid pace that the regulators can't keep pace, but they are now catching up. And I think the good news is we have an environment where this isn't going to be tolerated. We have an environment where it's going to be safer for people to put their money in the long run. Pension funds will grow, 401ks will grow. All those things are going to be a reflection of the fundamentals, not day trading action from day to day and pure speculation, which is really what you're seeing today.
So you think this kind of social media mob activity, they're going to really crack down on that?
I think the power of technology is real, and the power of social media is real, and we're seeing it play out in interesting ways that have never been before imagined. But the regulators will catch up on that, and I think we don't want to see innocent people get hurt. We don't want to see people sucked into things that they don't understand. And financial literacy is just as important as investing. It's important for people to be educated about the risks associated with this, understand where their trades go, how they work. What are the fundamentals of the company? And that comes with time, and that comes with education. And that's something that's been missing from the equation, but the regulators will bring that to the table as well.
We got to teach it in schools.
Absolutely. It's interesting. I'm chairman of the Massachusetts Jumpstart Coalition, which is the largest national financial literacy organization for K through 12. And we are seeing tremendous movement at the state level and at the national level towards implementing financial education, requiring it in the schools, bringing it to households, because a lot of times mom and dad aren't comfortable talking about this. And the kids come home, they have questions. So I think we need to be able to have a dinner table conversation where we can talk about the good and the bad that comes with the things that we're seeing in today's. And this is a great discussion that will help with that.
Yeah. Anything I didn't touch on that you think we should point out?
Well, I think it's more that let's recognize this is in specific segments of the financial market. It's not widespread. It's only in the most speculative areas. The broad financial markets remain very strong and they remain very robust. And you have a lot of interest, and you have a Federal Reserve and a Treasury that really stand behind the financial markets. But you do have pockets of excess that show up from time to time. And there's a process of sort of weeding that out. And that's what we're seeing right now.
Great. All right, Larry, thanks so much. Thanks for taking the time to do this. I appreciate it.
My pleasure. Thank you for doing it.